Good morning. Welcome back to the Junius Maltby channel. We're going to have to wade our way through the headlines this morning together and generate some good conversation because there is some news coming out. So thank you all for being here. Welcome to the channel. Welcome to the program if it's your first time. And for all of you 3,100 dedicated subscribers, thank you guys for the motivation and support that you show this channel to keep it going. All right, to the news. There's some kind of crazy stuff happening if you guys are taking a look around, which I'm sure many of you are. But we're going to start right off with this headline here. China's pile of debt keeps rising. Why disinflation raises debt stakes for China. Well, as you know, China is got a lot of debt and their growth is slowing down, which is not a good thing. We're going to have some charts to pound through here in just a second. You'll see some of that kind of in a more visual way. But the global financial system stands on the brink of second credit crisis. This is an awesome article. I like this guy. I like the way he wrote. If you Google it and find it, I don't actually have his name up there, but you can just type in the title if you want to read the whole thing. The world financial system stands on the brink of a second credit crisis as interbank lending shows increasing risk. This is something we've been talking about, guys, on here for quite a while, and many of you, if not all of you, I'm sure are quite aware this is happening. You can see it. But let's just read this together because there's some good stuff here. The world economy stands on the brink of a second credit crisis as the vital transmission systems for lending between banks begin to seize up and the debt markets fall over. The latest round of quantitative easing from the European Central Bank will buy some time, but it looks like too little, too late. It was the collapse of U.S. house prices back in 2007 that resulted in the seizure of the credit markets and banking crisis of 2008. And it would be easy to lay the blame for the 2008 financial crisis at the doorstep of American homeowners. Easy but wrong. The collapse of the U.S. housing market was not the cause of the crisis. It was merely a symptom of the more insidious ills of cheap credit, low risk, and the promise of another bailout around the corner. Again, that's been a mantra and a theme on this channel from day one. It was all those ninja loans, no income, no job, no assets, no problem. These people had no credit, but whose fault is that? It was the people loaning them the money, the cheap, easy credit, and the low risk, and the promise of bailouts. All of this emanates and comes from who? The heroin dealer, the drug dealer, the kingpin himself, the Federal Reserve. They were just pumping money into the system in collusion with the Treasury Department. You know, this was just one giant cabal. And everyone knows it and talks about it, but no one does anything about it because the almighty Federal Reserve is all-powerful. But let's keep going. The Keynesian pump priming that has taken place on a colossal scale across the world is failing. Stop right there. I knew I loved this writer when I read that line because he just slammed the Keynesians, and not very many writers do that. So I don't know how long this guy's going to last in the journalist world because typically people that use phrases like that operate little channels on YouTube with less than 3,000 subscribers. So, yeah, I like this guy. All right, the Keynesian pump. The Chinese economy was growing at a 12% in 2010, but that slowed to 7.7 in 2013, 7.4 last year. Its weakest in 24 years. Economists expect Chinese growth to slow to 7 this year, 7%. It is the once booming property sector that has turned into a bust and is now dragging down the wider economy as the bubble deflates. I'm sure you guys have seen images of these completely abandoned housing areas, brand new, and shopping malls and urban sprawl that China built expecting growth, and then nobody moved there. Pretty incredible. But here's a chart. Look at that. U.S. money printing has boosted all markets to record highs. Look at that. Just tons of free fiat. Just helicopter Ben, even though we don't have Ben anymore. I kind of miss Ben. But Baltic Dry Index, you know, boom and bust. Shipping is slowing down, as you know. We talked about that a couple episodes on here. China economic growth slowing. There's a good chart that reflects it. Look at that. Spike and then just kind of peters off. coming into 2015. Doesn't look like it's going to get any healthier or better. Here's real trade weighted US dollar index, major currencies. So the US dollar is spiking. We're going to get to that. And you can see that Bitcoin has collapsed. We don't want to get into too much detail on this, but the gentleman in this article points out that Bitcoin flourished as a quantitative easing was expanding. It soared in value. And now that the quantitative easing has ended, Bitcoin has somewhat collapsed. So I think that's kind of interesting. And meanwhile, gold has held strong. So, take that information and do with it what you will. You can come to your own conclusions. Risk of lending between UK banks is rising. So there's some risk that they are determining between, in the LIBOR rate, the rate at which banks loan money to other banks, and the risk percentage based on that. Going up, probably should be higher than that, but here's what I really want to get to. Let's talk about the dollar. Dollar climbs as rising volatility spurs emerging market exodus. I'm going to use the phrase again. I hope you guys don't get sick of it. But the dollar is merely the leper with the most fingers left, as the brilliant Max Kaiser puts it sometimes. I know me and Max Kaiser have a little differences of opinion. He's a pro-Bitcoin guy. I'm not. But I do like that phrase. Everyone runs to the dollar when things are getting tough in the world, when there's war on the horizon, smoke on the breeze, and world economies such as China collapsing. Everyone goes, oh, the dollar's the safest place, so they just run to the dollar. So the dollar kind of spikes up a little bit and people run into it. Volatility is spurring that emerging market exodus. People are fleeing some of those foreign markets because of concerns about the risk. And then I found a little bit more information on, this is coming from Bloomberg. The dollar strengthened to its highest level in more than 10 years against a broad basket of peers, as a standoff between Greece and its European creditors and tenuous peace talks with Russia over Ukraine sent volatility soaring. So, as you all saw the headlines this morning, they kind of came up with a ceasefire. Who knows how long that will last between Ukraine, the Ukraine situation between the pro and anti-Ukrainian government, the rebels, whatever you want to label them. Everyone had a little sit-down meeting and came up with a ceasefire. But that's not the topic we're discussing here, so let's get to it. Guess what happened the last time the US dollar skyrocketed in value like this? Can anyone take a guess? When was the last time and what occurred? The last time the dollar, the US dollar, performed the way it's performing right now? Well, over the past decade, there's been only one other time when the value of the US dollar increased by so much in such a short period of time. And that was in mid-2008, just before the greatest financial crash since the Great Depression. A surging US dollar also greatly contributed to the Latin American debt crisis of the early 80s and the Asian financial crisis of 1997. I think that let's take a pause here and we'll discuss some of this. A lot of people believe that World War I and World War II were the same war with a brief armistice in between, just a brief ceasefire. I tend to agree with that notion. I believe that the major financial collapse that we experienced in 2008 and the one that we're going to experience next are basically one giant event, and right now we are in that brief armistice period. So 2008-9, the collapse back then, all that chaos and the economic instability that the world went through. They slapped some band-aids, some temporary fixes on it, and we're in that brief period. Maybe it's the eye of the hurricane, you can call it that, going into the next phase. I don't want to be a Debbie Downer, but I do believe I'm a realist. And, when you look at facts like, okay, the last time the dollar behaved like this happened, it's important to identify, predict, decide, and execute when you take in information. We've identified some facts here. We should predict what's going to happen. We should make decisions upon those observations and then execute our decisions and lifestyle changes and what we plan on doing to prepare for whatever might come around the corner, or whatever could happen tomorrow. It's very, recognition, prime decision making. That's another one. We've seen things before. We recognize them. We recognize the fact that the dollar is at this point where the only other time it behaved like this, a crash occurred. Well, we have experienced it once, so our brain is telling us something. And I'm sure all of you feel it inside your gut. You observe it around you. You can kind of see it in the news. And it's at these points and these junctures where you and I and others have an obligation and a responsibility to make sound decisions based on our observations. So that's my little soapbox on this. I can't believe that other people in the financial sectors and in the world don't see what's going on. I know some of them do, but it seems like they forget. And then they keep on doing the same thing over and over again with the same result. And they just keep making the same mistakes. And as you all know, it's insanity. Absolutely insanity. So let's move on, and we'll take a look at gold and talk about how all of this is leading to, as you know, gold and precious metals, the collapse of the fiat empire, the rise in precious metals, the sea change that Antal Fekete talks about, the basically entering a new phase, the Great Reset, when it comes to money and currencies and transactions between each other, goods and services, and the flow of capital. We're in a state of evolution with it. Things are not going to be they were back in 1950, 60, 70, 80, and so on. It's changing right now. And with change, with this metamorphosis, is going to come some pain, and it's going to be a shape change. It really is. Where it's going to go from an ugly caterpillar to hopefully a beautiful butterfly. But I don't know. This little ugly caterpillar that's crawling on the ground, this fat Keynesian caterpillar that's just gobbling up green leaves of fiat, he might morph into some like demonic caterpillar dragon of fiat. I don't know. I mean, because again, we haven't been through this, so we don't know what's happening. All right, gold prices on Thursday aimed for their first gain in 3 sessions following a pullback for the U.S. dollar, disappointing economic data and news of strong demand for the metal in the fourth quarter of last year. Okay, yeah, gold, there's some demand happening. We've seen it, we've talked about it, and we're going to borrow the term from our friend Brian the other day. We talked about that article that Brian wrote about gold being worthless, so he's given us a priceless phrase, and we're going to continue to use it on this channel, hopefully. It looks like the Swiss bank is falling into the category, or some of their investors, I should say. Some of the investors of the Swiss banks have fallen into the category of hobbyists and collectors, because they are in that archaic mindset that Brian discussed, and they favor gold amid charges on cash. So, well, investors are buying more gold as an alternative to hold Swiss franc cash deposits, according to Vontobel Holding AG, a Swiss bank and wealth manager. We keep noticing that gold is coming back into favor with investors, Vontobel Chief Executive Officer Zeno Staub, 45, told reporters Wednesday after the Zurich-based company announced full-year earnings. February 12th, check this out. The Indians this is going to revolutionize. I think this could revolutionize the next couple of years in gold. So anyone who thinks gold's going to go down back to 700, I want you to look at these articles. February 12th, India may soon announce a lowering of the import tax on gold that may boost demand in the country. But one of our viewers here on the Junius Maltby channel sent me this article this morning, and I thank him for it. This is a good one. So, if you don't know already, India has these import taxes on gold. It's really, it's an attempt to curb the amount of gold that flows into that country, because gold in India is worth more than it is here. If I could sneak it in, smuggle in gold, like you're smuggling in cocaine to America, you could sell gold in India more than you could sell it for here, because the demand and the appetite for it is just insatiable there. They find it in airports. They find it in the bathrooms on airplanes, stowed away and hidden. They have found it in lockers in schools. There's like just gold bars. People just smuggling them in and trying to get gold into the country, because that's where they invest their money. It's a very traditional, very cultural thing to put your money in gold. How India may rattle the global gold market. Well, if this happens, let me tell you, if they do lift these taxes and these import bans and just basically allow the free flow of gold, like the free market should be, the free flow of gold into India, as in the people want to buy it, they can buy it, and there's no penalties attached. It's just the gold is allowed to go to India at the rate at which they wish to demand it. You're going to see a spike in gold. Because remember, even the Central Bank of India back a couple of years ago bought over 220 tons of gold when gold was $11.40 an ounce. The Indians do not bat an eye at current gold prices. You have to understand, they were gobbling gold up even when it was $1,800 an ounce. So the flow of gold is going to return to India. I personally believe that these import taxes that were placed on gold by the nation, by the state, the government of India, I believe there was outside global pressure to do that, to keep the price of gold down. I believe Western governments, the United States, possibly the EU, maybe the UK government, I believe there was pressure there. They said, hey, can you guys please kind of figure out a way to curb the flow of gold into your country? Because a lot of the gold was leaving Western countries, going to India. It was driving the price up, creating an environment of fear towards the fiat currencies, because everyone knows that gold's that thermometer. It's that measurement that people see, and when they see it going up, it just instills in everyone a decreasing faith in fiat paper, because they're seeing the paper be able to purchase less gold. And I don't care who you are, I don't care what Keynesian ideas you have, you got to admit that that's the case, that that's the truth, and that it is embedded in the human psyche. So not only are Swiss investors buying gold, not only is India looking at curbing the import taxes, but hedge funds are massively long gold and they're short copper. Two things here. If they're long gold, that means they see gold going up. Short copper, as you all know, copper's the little canary in the industrial mine, the growth mine, the economic indicator, and it so goes copper, so goes the market. And if copper's dropping, Dow, NASDAQ, all of that, all those sectors are most likely going to soon follow. So I don't know, we just ran through a ton of headlines here, and I'll tell you, you got to look at the theme. What are they pointing to? What's going on? What's happening? To me, it looks like there's some shaky ground occurring, like we're walking on thin ice. But then again, could be wrong. Who knows? Might wake up tomorrow to rainbows, butterflies, and unicorns. But we're going to close with again, another viewer. You guys are awesome. I'm loving this. You guys are starting to send me some good stuff to talk about. And we could have done a whole video on this, but there really isn't too much of a reason to, so I'm going to point you at the video that was sent to me by a viewer, and you can just run off and watch it. We'll discuss it here for a second, give you my thoughts on it, and then you guys can go watch this when you're done with this video, of course. America is choking. Operation Choke Point, Mike Maloney. So one of the guys on the Junius Maltby channel sent me this. And what is Operation Choke Point? Well, it's an initiative of the United States Department of Justice, which is, it's amazing how governments can have a bureaucracy, and the name of which is the actual opposite of what the name connotates. So the United States Department of Justice really doesn't deal out any justice at all. It just basically, it practices injustice on other people, as you can see here shortly. That was announced in 2013, which is investigating banks in the United States and the businesses they deal with payment processors, payday lenders, and other companies believed to be at higher risk for fraud and money laundering. Well, what businesses are we talking about? Who are these horrible people? Okay, ammunition sales. Let's see, I've gone to Cabela's before. I've been to multiple sporting goods stores that sell ammunition, and I can pretty much guarantee you they're not practicing money laundering. Cable box descramblers. Coin dealers. You mean to tell me of all the entities that are up here, lottery sales, lifetime memberships, the pornography industry, online gambling, tobacco, racist material surveillance, of all of these, you mean to tell me coin dealers are number 3 on the list? It's like speech. Sometimes I get speechless on the channel, so you guys got to pardon me. Yeah, I get shocked at what occurs here and what we're dealing with, and I think this is just a sign at the end of what we all just talked about. When you look at now what the government has pointed out as being basically enemies of the state, having coin dealers on the list is inappropriate. I don't have a problem with them going after some of these other horrible industries, most likely, but I believe they're blanketing and broad brushing all of it. But I think they're also using it as an excuse, just like I think at times that the drug war was a major excuse to expand a lot of the violations for privacy in this country and the rise in the military police state in America. And just like the Patriot Act was used to basically strip us of all of our rights and privacy, this is basically just, the details of this operation here, this list you see. These are basically things that the government, I think some of them they put in there to get a reaction from people that is more positive. Like, people would see this list, your average person that's not as well informed possibly, and they would go, well, yeah, Ponzi schemes and escort services and drugs and dating. Yeah, so they're going after prostitution and Ponzi schemes and pornography and pyramid schemes. Well, that's good. I agree with this operation. I like that. Well, no, stop right there, sir. What's wrong with the people that are selling coins and ammunition and firearms? There's nothing wrong with those. All right? But they're lumping them in there because they want to attack those things. They don't want us to have firearms. We haven't really talked about firearm ownership and gun rights on this channel much, but I'm a firm proponent of the Second Amendment. Got to tell you, absolute 100%. And it's a right. I believe they're imperative to liberty and freedom. And that, again, we haven't talked about it much, but I think that there's reasons for this. They might see something coming, and they want to curb the proliferation of firearms so they have a little bit better control, because it's much easier to march people into ovens and round them up in ghettos and gun them down and gas them and exterminate population groups and control large segments of a nation when they're unarmed. It might have been a different outcome. There might have been a very different outcome had, when the SS troops of the German Wehrmacht stormed the Warsaw ghettos of Poland, had everyone in the Warsaw ghetto been armed, trained, and been a capable insurgent, or what the Nazis would have termed at that time probably rebels, it would have been much more difficult to round people up and load them on the trains and to take people's kids away and to just exterminate those individuals. So anyways, that's a long speech there, but we won't get much further into that. Take a look at this, the Operation Choke Point. It's wrong. It's corruption. It's not justice. And on January 29th, so just recently, the FDIC issued a financial institution letter that effectively ended Operation Choke Point. However, it's not over yet. I did some more reading on that. As reported by Forbes, a change in the political landscape, many businesses threatening legal action, and a congressman with a background in banking forced the bureaucracy to admit to misconduct and to stop financial attacks on legal businesses that Obama administration deems to be politically incorrect. I'm guessing that this just went under the radar. It's still occurring, still happening, but they just got caught with their hand in the cookie jar, or they got caught abusing their power, and so they're going to act like they're no longer doing it. But any government that practices such acts upon its people shows you that government no longer views the people as someone they need to take care of, but more as the enemies of that government. That's just a fact. The government is starting to behave and act as if the people in its own nation were its enemy. So that's a dangerous sign. All right. Hope you guys enjoyed today's broadcast, today's episode, whatever you want to call it. Thanks for being part of the Junior Small P channel, the program here. Thanks for submitting all the information you guys do on a daily basis and the comments you contribute. All right. Keep your eye on the news, your eye on the game, and keep stacking, bro.